see when you bought it below 100, 96? What did you see that maybe others didn't? Because you were really an early believer. Why did you know that there would be a promise here?
You know, the whole crypto revolution comes out of a breakdown in trust in institutions. And if you think about post-08, and then we did the quantitative easing, and that process took a long time. 2012, we had the European financial crises. And so it was right there when Bitcoin was kind of starting to at least break into my zone. You know, the Satoshi white paper was written in 2008. And it felt like there are enough libertarians, there are enough people that thought inflation's going to a zillion. I mean, remember, really smart people. People like Paul Singer was wanting to throw Adam Bernanke in jail because he thought we were going to hyperinflate the world. And so there was a real sense that this is an alternative for the cypherpunks, for the libertarians, for the people that want to.
And an alternative for gold.
At that point, it was an alternative money in their mind.
Okay.
It turned out, in my mind, it's an alternative for gold. It's a store of wealth. Let me store my wealth somewhere. The computer science is really cool, but just as cool as, you know, the token mechanism to create social networks. And so these are peer-to-peer networks. We don't need to trust the center. We can trust the network, the cryptology inside this computer science.
Which is why blockchain is so believed, because it's a structure that you can trust.
Yes. And so blockchain really is a database.
Okay.
A blockchain is a database. It's a really good database, and you're going to see private blockchains all over the place. It would be shocking to me if every corporate treasury in 5 or 10 years doesn't have a blockchain treasury, because it's so much more efficient. You think about Microsoft's got offices all around the world, and at the end of each day, Microsoft Taiwan has got to, you know, equal up with the San Francisco office or the German office, and, you know, they're wiring money all over the place using the SWIFT system. In a blockchain database, they can hit the one button in the ledger just, and so you're cutting out lots of people, and you're cutting out lots of mistakes.
What do we need to understand more about Bitcoin, do you think? I mean, will we see Bitcoin go back to the highs?
I think Bitcoin will go back to the highs once we have a custody solution that people really trust. And so what's interesting is, I mean, it's a grand irony in some ways. The coins themselves, when they're floating out in the ether, if you want to think about it, are really, really safe. What is at risk is your private key. So you've got a key with lots of letters and numbers on it. That's your access to your coins. If someone steals that key or you lose that key, you've lost your coins. And so protecting those private keys is a big industry. There are all kinds of custody solutions, quite frankly, that are really, really good. We custody a lot of our Bitcoin at a place called Zoppo. I feel 100% certain that they're safe there. But I also know that if you're sitting at the state of Wisconsin and you're responsible for, you know, your state's pension money, you're probably not going to risk your career on a company that's called Zoppo yet. You're going to feel much better if it says Bank of New York or Goldman Sachs.
Right. That's a very good analogy.
And so there's this, in essence, irony that until we get institutional custodians to say, hey, your keys are safe, the big institutions are going to be more reticent.
And they have been, by the way.
And the positive news is I see lots of players, traditional custodian players, spending lots of time and effort trying to figure out how they're going to get into this business. And so I would bet sometime within the next 3 to 12 months, you're going to see big announcements, either consortiums or actually individuals saying, hey, we'll custody this stuff.
Very, very pioneering of you, Mike. BGCI is the index designed to track the performance of the largest, most liquid positions of the cryptocurrency market. Before you go, Mike, let me get your take on the stock market and the broader markets out there. What's your take on where we are right now?
You know, listen, it's interesting. We're in a rate cycle where rates are going higher, and the Fed, I think, is going to continue to push rates up higher. I don't think they're going to accelerate, but they're going to keep pushing rates higher. And so we've got a president that creates lots of instability, both good and bad. And so there's more political nervousness and risk. We've got rates going higher. At the same time, we've got a synchronized global growth system. And so I think the stock market is going to stay volatile, but it's going to grind higher. I'm less, you know, long, because on a risk-adjusted basis, it's a riskier trade. But I think, you know, we still have enough money in the system that we're heading higher.
Yeah, and it's a good backdrop. Economy doing well.
Economy's doing well.
North Korea willing to give up its nuclear ambitions, we're told.
We're told.
We'll see about that.
Listen, the European economy is doing okay. The Japanese economy is doing okay.
Right.
And so it's the first time, literally, since I can remember, we've got a synchronized global shift to the right. And as we get an inflation number like yesterday, a little bit lower, it's just okay. Because the risk really would be that the Fed has to accelerate and rates go up, and finally we say, wait a minute, what are we doing?
Right, but inflation hasn't been an issue so far.
It hasn't been an issue.
Right.
So we have a little bit of this Goldilocks scenario here.
Exactly.